Hello, and welcome to the Eugene Real Estate Podcast. I am your host, Vince Casey. This is the first podcast devoted entirely to the Eugene real estate market, where every month we bring on local experts to discuss current trends to help us navigate the ever-changing landscape that is real estate. The Eugene Real Estate Podcast is now sponsored by House to Home Construction. House to Home Construction. Love where you live.
Today's guest is Chris Watkins, a local mortgage broker at Borrow Smart Mortgage. He is also an investor who does flips in Lane County. Chris, welcome to the show.
Thanks for having me, Vince. Appreciate it.
Yeah, absolutely. I've gotten a lot of great conversations with you offline, and it's good to have you on the show finally so we can go over some of these rates. I guess I kind of want to just jump into it right now. What is going on with the rates? How do they look this new spring buying season?
Yeah, let's rip the Band-Aid off and just go for it. So, yeah, it's kind of fun that we're starting or having this conversation today, at the end of this kind of tumultuous week. The first thing I would say is that's the most common question I get every time is, what are rates today? What are they doing today? And I'm starting to respond with another question, which is, if you were to go onto a car dealership lot and you ask them, how much is a car today? They're going to look at you a little bit funny and say, well, what does that mean? It essentially means that rates are individualized. I can tell you a general market trend, but rate for you as a borrower or you as a buyer is going to be very different from the guy next to you, just for a lot of different factors. So that's kind of the first caveat that I always make with what rates are doing today. But kind of today in the overall market, things are wildly volatile. Trump's tariff announcement, the Liberation Day, has kind of sent the whole market, our whole economy kind of into a bit of a panic mode. The stock market is way down. Stocks and bonds, the bond market and mortgage rates move very much in lockstep. And so stocks and bonds kind of move in opposite ways. So when the market is optimistic, then stocks go up, bonds tend to go down. When people are fearful, then stocks tend to go down and bonds tend to go up, which is great for mortgage rates. So kind of this tariff situation is adding a whole bunch of volatility to all sectors of the economy. And so capital or people with money are moving their money from more risky places to be like stocks into safer things like U.S. Treasuries and bonds. And that makes the prices of bonds go up, yields go down, which is, again, all these things are a little bit too deep in the weeds, but great for mortgage rates, which means we've been dropping quite a bit in just the last week alone in anticipation and then in response to the actual tariff announcement. So, that's great for anybody who's in the market right now for purchase or for a refinance. This is a great time to strike because the other part of that is the market is really volatile. People don't know what Trump is going to do next, how other countries are going to respond. So there's a lot of kind of fear in that. And as the market responds, it could vacillate pretty wildly. So, even though rates have gone down, there's a lot of uncertainty around layoffs and slow hiring, and there's fear in employees. So kind of it's all a double-edged sword. You might get better rates, but at what cost? But, if we're just talking about exactly what are the rates right now, they're doing pretty well. So if you're in the market, now's a great time to buy.
Yeah, I've got a few folks on my buyers list that have just put their plans on hold due to the political climate right now. And I haven't really had a really firm answer for whether that's a smart move or whether that is maybe being a little bit too timid. What is your personal take on that?
I think it depends on your reason for putting it on hold. I certainly understand if somebody is fearful for their job security, they're fearful for, what that might mean for their business. Like, I really understand why people would be a little bit hesitant with those things, maybe a little bit more up in the air than they used to have been. If you're concerned about real estate in general or the market crashing, that's a little bit different. So in every downturn, every recession that we've had for the last 75, essentially since World War II, every recession, real estate has gone up in value. with the exception of 2008. But that's the one that everybody remembers is 2008. And that recession was caused by housing, by poor loans, by really unscrupulous lending and really loose lending. Yeah, really loose lending, and so that was the cause of that recession. That's not the cause of whatever is going to happen next. And so, typically in a recession, housing is a good place to put money. So, if you're worried about real estate itself, then I feel like those fears might be a little bit misplaced. But it's certainly understand if people are nervous about their own financial situations, that makes a lot of sense. So, I mean, there's never a perfect time to buy. There's always going to be a reason not to buy something, but real estate it's a long-term investment. It's a get-rich-slow scheme. Don't wait to buy real estate. Just buy real estate and wait, and it'll work for you.
Yeah, well said. I've heard you say rates are good a couple different times. I always like to kind of have a number on that, which I know is hard, but just
Yeah.
assume like a 30-year mortgage rate with a 750 credit score and 20% down. Could you give us a ballpark of what we're looking at for rates right now?
Yeah. Yeah. Ballpark with those parameters, you're going to be looking at, and it depends on if you're paying any sort of points down. If you're paying 0 points down right now, we're in the mid sixes, like 6.5, 6.6. Then if you have seller credit or any way to buy that rate down, you can easily get down closer to 6. Actually, it's something that has changed in the last month is adjustable rate mortgages, which haven't been a part of our repertoire for a few years now. We're starting to come back, and they're actually beating conventional fixed rates by almost half a point. So I can get somebody down under 6% right now in an 7-year adjustable mortgage, which has not been the case for a long time. So yeah, a mortgage rate with a 5 handle on it is certainly in the cards at the moment. But again, volatility means things could change next week.
Yeah. So what type of opportunities are you seeing out there in this market? Are you seeing smart plays that are available here and now?
So, I mean, I talk with, as part of my job, I connected to a lot of different agents. I talk with different lenders. Within our own office, we have an ongoing conversation about kind of what we're seeing out there. And, the tariff thing is super new, so that hasn't really filtered its way down into a lot of people yet. But just with talking with agents, I'm seeing a couple of things locally here. Kind of two things have stood out in those conversations. One is, this might not be a surprise, that people are getting cold feet and there are more terminations going on. So people get a house under contract and then they pull out within, a week or so, typically within the inspection period. And that is, I've talked with agents across the board and they are seeing that more than they've seen in a long time. And so it seems like more of a market trend than, to any one agent. It's happened. I lost a deal yesterday. Somebody backed out. And I think that's partially because of these overarching economic fears that people have. But it's, every situation is different, but people I think are using the economy, like you said, with your clients, they might be using the economy as a reason to kind of step back from, even if they're already under contract with a particular deal. So people getting cold feet have a reason outside of themselves to say, maybe this isn't the right thing for me. So that is one thing that I'm seeing or hearing from a lot of people. I think there are a lot of listings that are coming on the market. I talk with a lot of agents who say, I'm super listing heavy right now. Like people are wanting to put their houses on the market. So, which is great because we need inventory in Eugene more than just about anything else. So that's a good first step. If the buyers are willing and responding to that is yet to be seen, but I've heard of a few multiple offer situations. So there are some scenarios where things get really hot. And I think under 400,000 in Eugene is going like hotcakes right now. Those are where you're seeing some of those multiple offer situations. So if you're a first time home buyer looking at something that's, in the $400,000 range, you better be ready and have your ducks in a row to make an offer because those are going off the market real quick.
Yeah, I saw an article that said that baby boomers had just replaced millennials as the top buyer in America right now. Where have you seen most of the buying activity happen in Eugene?
As far as age or as far as like location?
I think just like the most activity, like, are you seeing more new first-time home buyers? Are you seeing more cash buyers come to the plate? Whereas has there
Yeah.
been like a demographic that has really stood out? Or is it really coming from everywhere right now?
I see it kind of across the board. Obviously, as a lender, a cash buyer is not going to be talking to me before they before they buy. I think the higher end of the market, so over maybe 750 in the market, the higher end market tends to be dominated by cash buyers. Those are people for whom the whims of the market don't matter to them quite as much, so they're able to pull the trigger on cash buys. So that seems to happen most at the high end. I am seeing a fair amount. I mean, first time home buyers, there are a lot of people who are out there who are, trying to get into their first home. And that's, I love trying to help folks like that. Sometimes I have to throw some cold water on their plans if they say, oh, we want to buy our first house and we can only afford, $1,500 a month in mortgage. I'm going to have to say that's not right now. That's just, you're not going to be able to get something in this market. So I don't like to do that to people, but I really I really value being honesty and being upfront with somebody and saying, okay, this is where you are today. Let's help you get to where you want to be, even if we can't make something happen right now. But so yeah, first time home buyers they're always trying to find something. So that's why, again, the market's super hot there. I work with a number of investors. Myself being an investor, that's another part of the market that I see a lot of. And interesting. There are a lot of different motivations for investors. There are some people who are scared off by the rental situation in Eugene and are either moving to Springfield or they're moving out of Oregon altogether. They're selling their rentals. Um, I think that may be a little bit of doom and gloom, but other investors are super excited about opportunities to buy, to do value add, to flip. I think the flip market is still really strong. I toured a house that was an off market deal last Friday, and it was a great price up in the Bethel Park or Aubrey Park area, and it was well priced, and there were 20 different investors that were on that walkthrough, and it ended up going for $50,000 over what the people were asking. So if something is priced well, it's going to move real quick.
Yeah, I've definitely been taking a close look at the investor market. It's something that I closely follow. And a lot of this stuff, the fixtures that are going on the market, like just simply don't pencil. So I'm not
Yeah.
sure this off-market deal that you got a hold of. I'm sure if you're seeing something that pencils and it looks like the ARV is correct, that it probably does look like gold right now.
Yeah, 100%. Yeah,
Yeah.
finding those deals is tough. For the flippers, sourcing your deals, it's always the hardest part of doing that. But I think now it is especially difficult. So when something does come up that is well priced, there are a lot of people who are jumping on it.
Yeah.
So and those tend to be, because those are fixers, those tend to be, they're going to end up, when they're done, they're going to be in that first time home buyer range. These are generally, you're buying somewhere in the 2 to 250 range and selling in the high, mid threes to 400 range. So they know on the back end that people are really buying at those prices. So people are being a little bit more aggressive to get their hands on a flip right now.
Yeah, I noticed that you have a flip that's going to be coming up over in the university area. How did you get your hands on that one?
So that was through a wholesaler, somebody that I know that he owns a bunch of rentals in the area, but he also likes to connect, find sellers, talk with maybe some distressed sellers, and then be able to turn those houses around to folks like me who can fix it up and either sell it or rent it. So yeah, that was an off market buy. And yeah, that's an interesting project for sure.
Yeah.
Um,
Well, what's giving
the
you the confidence to move forward with your flip projects? I feel like a lot of investors kind of put their hands in their pockets in an uncertain market. What's giving you the confidence to move forward with your projects?
It's funny because it's partially because I'm already into it. I'm committed. I got you got to write it out once you're in there. So, I bought that house in end of October of 24. So, been working on it for a few months. And again, that's a house that could be hitting. It's real close to the university, so you know that there are always buyers for rentals in that area. So I know that somebody's going to want the house on the back end, and there was enough of a margin for me and my partner to make a decent profit doing that. The interesting part is for that one specifically is that the house is on a bigger lot, and one possible option for us is to go through the middle housing process with the city, split it into three lots, and build two more houses in the backyard of the existing house. And so that the calculus of whether to just flip it and sell it as a single family rental on a large lot, or that single family home on a large lot, it'll probably end up being a college rental. But to take that route versus going through the land division process, permitting, building two units in the back, um, and selling all three of those houses a year from now. That I've been weighing that back and forth multiple times a day. I still don't know exactly what I'm going to do. There are a lot of variables there. A lot of that equation is pretty big. But trying to figure out, is it better to sell into the market 2 months from now or to sell a year from now? Yeah, there's a lot of question marks there. So I'm going to do one of those two things. I'm just not sure which yet.
Yeah. Do you have any type of advice for investors that are out there looking for their next flip? I mean, obviously you'll probably have a better thumb on the market in 2 or 3 months from now. But is there anything that's sticking
Yeah.
out to you right now?
Again, I think if you're pricing it well on the back end, there's going to be a good buyer for it. You don't want to overbuild for wherever the house is. You don't want to put too much money into it. Um, so there is a market for high end flips, but that's very different than somebody coming in and doing something the first time. So flipping is I don't consider flipping investing. I think it's creating wealth in the short term, but it's not investing it in the long term. And so the mindset of a flipper is very different from the mindset of somebody who's going to buy it and hold it as a rental for a while. Um, and I've been investing for that's going on 19 years now. So I've been through a couple of down cycles, a couple of up cycles in between in that time. And like I said before, real estate is a get rich slow scheme. You have to add that time element, and that's compounding interest over time is really what makes real estate such an attractive investment. So if you don't have a long-term outlook, then you're going to be really moved by these economic shifts. If I'm picking up a flip now and thinking about what it's going to be in 4 or 5 months, I'm going to have a little bit of pause there. But if I'm buying it to hold long term, if I'm going to hold it for 10 years, I don't really care what's going on right now. I'm looking more at the demographics. I'm looking at the city, and I'm bullish on Eugene real estate for sure. Just overall, I think mostly because we built so few houses over the last 40 to 50 years that we're going to be in a consistent kind of shortage of supply. So, that puts a pretty good price floor under where we are now. So even in a downshift in the market, it's not going to be that big of a deal locally. Now, yeah, I'm doing what I can to help make housing more affordable, whether it's through making nice rental housing, making nice flipped housing, bringing that back into the housing supply, or building new housing. All of that I think is important to help increase the housing supply in Eugene, and by proxy bringing prices down. And that's on the lending side. That's what I'm trying to do too. Is you know give the best rates, the lowest fees to be able to get people into housing in an affordable way.
Yeah. I know there are a few ways to kind of beat the rates. They don't seem to be super popular right now, but I know that a lot of new builders are offering their own mortgage rates for homes that are being purchased in the new construction field. I've heard of a few owner carries out there that are offering a little bit of relief on the rate. and there's also been assumable loans that have been talked about a little bit. I haven't seen a lot of
Hmm.
those purchases go through, but is there any other type of relief, like any type of government assistance being talked about, or anything in the wind of getting some relief on these rates?
I mean, rates themselves, the FHA rates are, you know, an FHA rate today, you can get something in the mid fives, and FHA for your first time home buyer is going to be the best kind of hands down opportunity from a rate perspective. And they're a little bit more flexible on your credit. You know, if you have a lower credit score, then an FHA loan is really going to be a good fit for you. Um, it's for a lot of people when I'm talking to them, when I have kind of those initial conversations, there are there are three caps to what you can afford in a house, like what you qualify for based on your income. These days, I think a lot of people can qualify on income. Then it turns to how much cash you have to be able to put into the deal. Some people run into issues there, but probably 70 to 80% of the buyers that I talk to, kind of the cap that they run into is what fits into their budget. It really is, what is that monthly payment? And so, I tell them, I can tell you what you can afford, or I can tell you what you qualify for, but you have to tell me what you can afford. I can't look into your budget and say, okay, you can only spend $2,000 a month. So I don't want to set anybody up for failure by giving them a house payment that doesn't really fit into their budget, that stretches them too far. So we really need to work hard up front to say, okay, what fits your budget, and then we can reverse engineer, a price range to be looking for in a house based on that. And that's usually where I start with people to make sure that they feel comfortable moving forward. And then they say, okay, now I want to go out. I give them a price range. They go look in their price range and they say, okay, yeah, I can find something that I like that fits my budget, or no, there's only, dumpy falling down houses in my price range. I either need to up it or make more money or figure something else out, get a parent to contribute. Seeing a lot of people going into deals with other folks. Often parents can be a really good resource. That's one thing that a lot of people might not realize, that you have a family member who has either better credit or has some cash that they can contribute for a down payment. We can work with that and help you know bring your mortgage down through that down payments. We can utilize other people's gift funds and credit and income to be able to qualify you for something that you might not be able to do on your own. And so that's, I see that more with younger people, but I've seen it. I've got a couple right now who are doing that, and they're in their mid 30s. And they've got people they have parents who are willing to help them, kind of get a leg up because they can't get it otherwise. So I say the government isn't necessarily coming to save you for coming to help you out too much, other than, they are actively trying to get mortgage rates down. That's expressed by the new administration. Their methods I'm not so excited about, but, I agree with the goal of getting mortgage rates lower. So hopefully there isn't too much collateral damage in the meantime.
Yeah, that's great information, Chris. If some of the folks out there listening would like to reach out to you and get further advice around making a home purchase or getting a loan, what's the best way to get a hold of you?
You could start with my website, chriswatkinsmortgage.com. Should be pretty straightforward to spell. A lot of resources there, both for buyers, investors. I post a lot of interesting information that I see in the market. You can subscribe to my newsletter on there. Vince, I know you're subscribed on there. My monthly Two Truths and a Rye newsletter, which helps illuminate different parts of the market for buyers and investors. My email is also hopefully pretty straightforward, Chris, CHRAS, at the letter U, borrowsmart.com. So Chris at uborrowsmart.com, or give me a call, 541-972-3721, or get in touch with Vince. You can get a hold of me. So come visit. When really actually in your neighborhood, Vince, right off of Willamette Street. So
Yeah, you and I live really close. That's how we met. You were just walking by my house one day and we're like, hey, are you the guy that does the podcast? And I was like,
yeah,
yep.
exactly. Yep.
Made me feel kind of regionally famous or locally famous for a few seconds.
Yeah, no, it's yep. Love the South Willamette area. I've been living here for 15 years now. My kids go to South Eugene and go to Roosevelt, and right after this, I'll be going over to Hayward Field to watch them at the Oregon Relays track meet. So
Nice.
just a big, nice Eugene day.
Yeah,
So
it's a great day today, and yeah, this is definitely a great neighborhood to be a part of, and definitely you're a good guy to know in this industry. So I'm glad
I
to have you
appreciate
on. And yeah, if anybody needs to talk to Chris Watkins at Borrow Smart Mortgage, he's a really down to earth, great guy to work with. I love the chemistry that he and I have together on putting deals together. If you're not working with a realtor yet, I would love to talk with you about working with me and some of the things that I can bring to the forefront. But yeah, I think that's pretty much our show today, folks. I'd like to thank our guest Chris for coming on today. I'd like to thank our sponsor, Pretty in Paint and House to Home Construction. And I'd like to thank all of you for listening. Until next time, I'm your host, Vince Casey.
Thank you.
Yeah, thank you.